Hello and Happy New Year. This is Danton Troyer from Four Seasons Wealth Management with our 2012 annual review. In this video, we'll discuss some of the important events that took place in 2012 and talk about what might be driving markets in the first weeks in 2013. Now, please stay tuned at the end for a required disclosure statement. Markets were turbulent in 2012 as investors dealt with uncertainty about elections, a global slowdown, and the fiscal cliff. However, despite some serious headwinds, equities put up respectable results, with the S&P 500 gaining nearly 13.5% for the year. The fiscal cliff was the issue on everyone's mind at the end of December, as it appeared that stubborn lawmakers were going to send us all over the cliff. Fortunately, a deal was reached at the beginning of January. Some of the major provisions extended the Bush tax cuts and patched the alternative minimum tax. However, the debt ceiling debate was postponed, meaning we'll be dealing with Fiscal Cliff Part 2 in the spring. The 2012 presidential election was another source of turbulence as President Obama duked it out against challenger Mitt Romney. Despite a solid win by Obama, markets weren't too reassured as investors immediately began worrying about the fiscal cliff. Economic growth was slow in 2012. While the economy sprinted out of the gate during the first quarter, the momentum quickly faded in the spring, leading many to worry that we were seeing 2011 all over again. However, as summer led to fall, we saw that the economy was growing just really slow. To everyone's surprise, the economy picked up during the third quarter, posting growth of 3.1%. Between June and October, the Dow grew more than 12% during a summer market surge that surprised the analysts, who called it a sugar high, held up not by basic economic fundamentals, but by expectations of additional action by the Federal Reserve. The housing sector was a big driver of growth this past year, as Americans took advantage of low interest rates to start buying houses again. Unemployment was another bright spot last year, with the overall rates dropping from 8.5% in January to 7.5% in November. This leaves us pretty hopeful for more improvement in 2013. The Federal Reserve was very active in 2012. Team Bernanke waded in to prop up markets by announcing several waves of quantitative easing. These bond buying programs were designed to lower interest rates and encourage lending by purchasing first Treasury bills and then mortgage-backed bonds. The most controversial move took place on December 12th when the Fed announced QE4, in which it promises to buy bonds until unemployment is less than 6.5%. This is a big move since the Fed has never before tied its actions to a specific goal. I think we can expect more action in 2013. Looking ahead, we expect that 2013 will present many challenges to the U.S. economy. We expect austerity measures implemented in the fiscal cliff to bite hard, as we have already seen happen in Europe. We also expect considerable obstacles to GDP growth as the global economy continues to grapple with slow growth and massive debts. However, as we always point out, the challenges bring new opportunities for investors. Once again, this is Danton Troyer with Four Seasons Wealth Management signing off for the month of December 2012. We hope you've enjoyed a quick recap of the year, and all of us at Four Seasons Wealth Management would like to wish you a happy and prosperous new year. As always, we'd love to hear what you have to say in the comments section below. If you have any questions about what you heard in this update or would like to discuss your personal financial situation, please give me a call at 314-432-2229. We'd be happy to talk to you. And while we believe the information in this report is reliable, we cannot guarantee its accuracy. Opinions expressed are subject to change without notice and are not intended as investment advice or a solicitation for the purchase or sale of any security. Please consult your financial professional before making any investment decisions.